Hello, everyone, and welcome to the Learn From Us Investor Academy podcast. We're super stoked to be here again. We are loving all of the wonderful comments you guys have been giving us online. We love the feedback. I'm Seth. As always, I'm here with the man, Paul. Just a quick note, folks, if you do love what you're hearing, let us know. The old like and subscribe.
It helps us a lot.
Yeah. We've been getting a lot of great feedback, and we love to know what you guys want us to talk about. Apparently, they love the public loves when I make fun of you, Paul.
Yes, they do. It's high school all over again.
So, in a non-bullying form, I'm gonna try and bust chops as much as I can.
You have to.
I was listening to some Warren Buffett recently.
Were you?
Well, I listen to my Uncle Paul and what he tells me to do, and I really love the analogy he talked about Ted Williams' book.
Yes.
Ted Williams, the science of hitting.
Ted Williams, the baseball player, by the way.
Are there others I should know about?
Well, I don't know. Ted Williams seems like a generic name.
I had a teacher in college that name.
Did you really?
Loved him.
Was he good at baseball?
No, he was good at science.
Okay, gotcha.
I'm a scientist, so the science of baseball sounds intriguing to me. And Ted Williams talked about the idea. For those of you who may not know or remember, Ted Williams is obviously one of the greatest hitters of all time. Did he average 300 or?
It was like 370 or something.
One year he hit
crazy.
400, ridiculous.
Yeah.
And he talks about how he laid out a square for the strike zone and filled it with 77 baseballs and found out what his sweet spot was. And I'm sure you heard the story before, right?
I mean, in some fashion.
Yeah. And he talks about how like the key for him to hitting was the idea that if he only hit the balls in the sweet spot, he could hit really well. He could bat 400. When he had to swing outside of the zone, his percentages, his batting average dropped down to like 230 or something. But Warren Buffett talks about how when you're finding these right deals, investing in businesses, or for you finding the right real estate deals, there aren't really many swings and misses. You can let one go past because there's so many more coming.
Mm-hmm.
And when you do hit that home run, like you talk about one good deal a year, which has totally changed my mindset. Like I think the idea of investing is very scary to a lot of folks, and
as it was to me when I first started.
Yeah. But so anyway, I just thought that was really intriguing.
Well, what does he say? What does Warren Buffett? He says it's the one time where you're allowed unlimited amount of pitches. So imagine if in baseball you only got out if you struck out, or you were called out on like a hit, like you hit the ball, they tagged you out at first or whatever, and you get unlimited pitches until then. You just wait for the perfect pitch, and that's all he's saying. When we talk about the one deal a year, you can go look at 1,000 deals. Just find the one that's the best one for you. But what do we do as a society? We sit there, we feel like every deal has to be done. We have to figure out how do we make this deal work. Well, no. You can move on from a deal. Okay, it doesn't work. Great, next deal. But we don't have that program. We're not programmed that way. We're programmed we must do a deal. I mean, I've literally had people who are novices say to me, I just want to get in the game. I just want to be able to do a deal. It's like, well, wouldn't you rather just wait for a better deal? No, this is the best deal. You're not going to find, you're telling me that you're so lucky that you happen to decide, I'm going to go invest now. And then on top of that, I found the one good deal in the world that exists right now. Give me a break. That's not even humanly possible. Are you okay over there? Sergey, please edit that out.
Yeah, Sergey, can you edit out that dead time? While I was sitting here, listening to you talk, and my microphone just kept on falling away from me. I didn't know if the world was spinning or there's something wrong with me.
I was like, why is he all of a sudden working this thing? It just kept,
then my microphone was just falling. So whoever set this up is a complete imbecile.
Fired.
So with that said, I know you're in love. There was some big action in the S&P, the stock market this week. I texted you late last night. Was it last night? It was like Christmas Day. And because you told me to sell Amazon for my best interest, as you've described in previous podcasts, it's the top the overpriced stocks that are going to get slashed first when things start changing. So you told me to sell Amazon maybe 6 weeks ago, and it's currently saving me $57,000 so far.
And by the way, it's up a little bit today.
No, don't tell me that. I feel better about the low
but
part.
September 20th, the S&P hit a high of 2940. I remember back then hearing people say, well, of course we're going to have a pullback. This has been too much. Like, well, what do you consider a pullback? Oh, 10% at most. And as of yesterday, Christmas Day, we were down 19.8%, which is pretty much bear market territory. And everybody's like, oh my God, this is worse than we thought. And my comment is, it's going to get worse, people, because we had such a run up. But Amazon, speaking of which, so S&P is down 19.8%. Amazon peaked at 2050, and they got as low as 1346 this last week, which is a drop of 35%. So 60% bigger drop than the rest of the market, 65%, because overpriced assets in times of when things go bad are going to be hit the most. Even Tesla's down. I mean, Tesla rebounded a little bit and all that stuff because of the whole they made money, but they were down at $299 the other day. I think they're up a few bucks today. But the whole point is, this is not I'm not some. And by the way, I was wrong for 3 years. I said stocks were going to go down. I should say that I said that stocks being bought today, 3 years ago, when I said that if you bought stocks, you weren't going to be doing well versus waiting a little bit longer.
Yeah.
And since then, the market's been up like 30 or 40%, so I look pretty stupid. But at the same token, when it all plays out, I'm quite sure it's going to look pretty accurate what I said. Problem is timing, and timing is always the issue. With you, I just sat there and said, hey, you have too much Amazon in your portfolio. It's grown too much. You bought it right. It grew too much. You got to start unloading this.
Well, I was wise enough to unload Tesla at a good time.
Did you unload it?
I unloaded it almost a year ago. I unloaded it pretty high when it was like
perfect.
380, and I had many shares of that, 70 some odd shares.
You know, I was wondering about that. I was like, I wonder if he got rid of Tesla.
Oh yeah, so no, the only in the in my family, the only Tesla stockholder is my 8-year-old, and he's just really hanging on at this moment.
I don't blame him.
But a $2 gain for him is really monumental per day. So
he's taking dollar bills and going like this to you. He's like, hey Dad, have some lunch here.
Yeah. Oh yeah. So So you've mentioned this huge market. This peaking market we've been in for 10 years. I mean, what does this change in the S&P tell you?
You mean the last 2 months?
Yeah.
The last 10 years were spurred by easy money. So this is the human mentality. When interest rates were down to zero, what were you getting by putting your money in the bank? You were getting pretty much 0% interest return. So most people would sit there and say, oh, well, then if I can put it in the S&P, I can at least get some return. Well, that builds on itself. It builds a snowball. Well, I can put a little bit. And it starts to go up and up and up. And for the last 10 years, with dividends, I don't think we had a single down year in the last 10 years. This might be the first one in 10 years. In fact, this is only the second one in like 18 years. That's not reasonable. People were only investing purely for the fact of, well, I can't get gains anywhere else. It was the same thing about, well, I should be invested in something as opposed to just cash, because people felt fearful of, I'm not making gains. I don't feel scared of that one. But now, after 10 years of gains, all of a sudden, who else is there to buy? And all it takes is a little bit of a dip, and all of a sudden people are scared. They start selling some more. We've had a few up and downs here in the last year. I mean, even when the market peaked at 29.40, it was only up like 7 or 8% for the year. It wasn't even up a ton. When people feel comfortable with getting these gains consistently, they tend to forget about the downside risk. Now we're going to see the downside risk. We saw a 20% drop in 2 months. I mean, that's a huge drop. People don't realize like how, to me, for a 20% drop to happen, you've got to make 25% to go back to even, right? Because 100 goes to 80. 80 to go back to 100 takes a 25% increase to go back to even. 25%. For after a 20% drop, so if you have $100, it goes to 80. How do you get from 80 to 100? You got to make 25%.
Tim, are you hearing this?
Do you follow this math correctly?
Last time I checked, 80 minus 20 is, 100 minus 20 is 80, but go on.
Right, so then to go from 80 back to 100, how much do you gain? $20, right?
Yeah.
But what's $20 of 80? You have to gain 25% from that 80 mark.
Oh, 25. Oh, I see. 25. Wow.
Yeah.
25% of that 80.
Just like if it drops in half, you got to make 100% to get back to even.
Wow.
Right? So that's a big...
Obviously, I never thought about it like that.
Well, yeah, and it's a very common thing. Now, granted, if you're in for the long haul, you shouldn't worry about any of this stuff. But if you're the person who looks at your stocks every day, you got to be ready for some gyrations, because right now, there's only so long. And people say, bull market doesn't end with age. Yeah, it does. At some point, there's enough people in the market where you can't. How do you get more growth in the market? How do you get more of this? I mean, when everybody in the world owns Amazon, finally, well, how does Amazon keep going up in price? They got to do something to go up in price, make more money. Well, unfortunately, they're already a $210 billion business. How do you make a ton more money? So I've liked it because I like buying cheaper, and I'm not buying yet. But the whole point is it shows the psychology of investing that we talk a lot about, right? We talk a ton about psychology of investing. All of a sudden, September 20th, there was no way 10% was going to happen. Now I talk to my friends who are advisors and I get the phone calls ringing like, is this the start? Is this the start? Which tells me there's going to be a little bounce back. But we need people to really feel so comfortable that all of a sudden it's expected to make money, and that's when the big falls happen. We're not even close to done with this thing. Will we bounce back from 20% down? Absolutely. I really feel we're going to bounce back. One of the few investors in the world who I really trust, he's always been very accurate with his timing. He's like, we're going to bounce back. In fact, I was surprised this last week before Christmas even happened. Like, I was floored that we lost that much that week, but these are just very standard things that happen. And the whole goal, though, is if you understand what long-term investing is and you understand what a good buy is, this is the news to you.
Yeah, I've shifted my mindset as well that way. And so I know you've been saying for years that you've moved a lot of your stocks into cash, waiting for all this to be over.
I'm 100% cash now. In fact, I'm short the market. I bet the market will fall.
And so I per your advice and per your teachings, I've sort of moved it too. So now when the market falls, I got a smile on my face.
Right.
Ready and waiting to gobble it up, like you've always said, which obviously is exact opposite of what everyone else is thinking.
Right.
So the rest, so it's just an interesting concept. I mean, yeah, it's awesome.
Yeah, and I love it because the ego in me has been looking pretty stupid for the last few years. So I want to sit there and figure out, when this comes through, somebody said to me the other day, it's like, well, the market's bound to fall 50%. I'm like, well, no, it's not. Everybody talks about how the market's not only going to fall 10%. So if all of a sudden people accept that 50% is going to happen, think about that in general. You're accepting that 50% will happen. 50% doesn't just happen. I hear all these things now. People are blaming Trump now. Listen, Trump's the guy who claimed that he was the reason why stocks went up, which is completely asinine and stupid. But to blame him for it? No, it's just cycles. Overvaluation happens. We can blame China. We can blame all these other things in the world. God forbid there's a terrorist act that happens and markets fall 30%. People blame the terrorist. No, it's overvaluation. It eventually wins out. It eventually ends up being the reason why things fall because that's what happens. Cycles happen. In an investing world, cycles are the most consistent thing over 150 years of stock market history, yet we all fight it. We all sit there and say the famous last words, it's different this time. If I hear that 1,000 times, it's different this time. No, it's not. It's not different.
Well, I know the good part about all this is probably 2 months ago, most of the financial advisors were warning their clients about.
Yeah. That's sarcasm in case nobody caught that. That's the thing. By the way, a good financial advisor isn't there to pick stocks.
Yeah.
But when the bull market happens and when you pick a stock for your client, it goes up, you look like a genius. You think you're a good stock picker.
Yeah.
As Warren Buffett always says, a rising tide raises all ships. You only know who's naked when the tide recedes, right? So a good financial advisor is there to sit there and manage somebody's retirement and say, here's what we're going to do for you consistently. And then when things are good, to remind them, hey, things are good right now, but there are cycles. And when things are bad, just remember this. And when things are bad, they remind them, hey, we're here for the long haul. We're here to worry about 30 years from now, not 3 years from now, not 3 months from now. That's what a good financial advisor will do. But unfortunately, just like most things in the world, when things go well for you a few times and you don't know why they went well, you get a little cocky, right? I mean, just like the last 2 years, I have not been as cocky because I've seen it go against me. And you better believe when the market does what I think it's going to do, I will be very cocky. I'll just be like, listen, I just saw what history said. Everybody else fought it. I just have to sit there and be a little more patient. And that's my goal here, is just to be a little more patient and wait for all those pitches. I'm going to let them all come past me. I'm actually probably I probably let a few balls go past me that I shouldn't have because I believe the psychology of investing that I feel if anybody shows me a deal today, it's probably going to be a bad deal because if it's on the market or if it's a stock that's readily available to everybody else is going to bid it up anyhow. So how is it possible this is a good deal? So I've probably gone to the other extreme, but the same point will be a few years from now, we'll be doing deals and people are saying, I wouldn't do that deal. I'm like, that's weird because it has more income and more revenue and more profit, less debt, but you're going to say it's a bad deal. But 3 years ago when it was an amazing deal, when it had less profit, more debt, all these things, you know what I mean? When I look at these things, I always tell people, trust me when I say when the S&P goes below 1,500, people will say, oh, the S&P is scary. So this S&P wasn't scary at 2,940, but it is scary at 1,500.
You talked about, you put something on Facebook, you're going to be buying your friends Chipotle.
Add me on Facebook, and if the S&P drops below 1,800 in 2019 or 20, which I think it's going to.
Didn't he say 2,000, Tim?
I did not say 2,000. We have verifiable proof. Just like when I said Baker Mayfield would be an awesome quarterback because all Browns fans are stupid. Same thing. I'm going to buy anybody, on all my Facebook friends, which is only like 480. I don't really have many friends on Facebook. Chipotle.
So I don't even know what that statement means. Can you describe like where it's at now, where it's going to go, and why you think that would be crazy, or you'll be celebrating?
Where is the S&P 500?
Why are you asking me? I don't know.
S&P 500 is down 0.45 today.
It's down already?
0.02%
Wow, it started up.
to 2000.
So it's at 2350 right now. It was at 2940 September 20th.
Okay.
I wanted to go below 1800 is kind of like my psychology. I was out of the market by like 1900. So I look at going, second goes below 1800, I kind of feel like, and I shorted it along the way too. So I'll be up a lot of money.
Oh, so this will be a celebratory lunch, not a I told you so lunch.
What's the difference?
Oh, sorry. I thought people were I see.
So, but I believe the S&P will go below 1500. I actually think it'll probably hit, low 1000s. And people think that's a hard concept. Like that's 50% lower from today. Yeah, but if you have such high valuations, just because I always joke with people, if it's all about just getting a discount on a price, well, hey, Tim, when we rent a house, let's just start at $1 million a month and go, you know what? For you, we'll do it for $2,000 a month. But if it's only worth $1,000 a month, $2,000 a month is still expensive. Same thing. The market, even at $2,000, even 20% lower from 2 months ago, is still expensive. That's what matters to me. If you understand value, you'll understand exactly where the market is at any time, and you'll understand what a good deal is. Right?
What our listeners don't know is that you're secretly loading up on friends and then investing in Chipotle.
What's Chipotle at?
Gosh, I was really loving it when it was.
Why were you loving it though?
Because it was going high, right? Remember
Yes.
when it was $7.50?
Yeah. Now it's like, what is Chipotle stock at?
Chipotle Mexican Grill is up $1.80 today, or 0.4.
$387 a share.
87.
But it was at 480 like a month or two ago. It was at 7 something
$7.50.
right before the E. coli or Ebola. What was it?
Yeah, something like that. Salmonella, one of those things. E. coli in the lettuce, that hurts everybody.
Yeah,
So-
but the thing is that everybody blamed it on that. No, the reason Chipotle fell was it was overpriced to begin with. And when the E. coli thing happened, all of a sudden people were like, well, wait a second. We invested in this thing based on growth. That's not going to happen anymore. It's amazing to me that everybody invests on the future as opposed to today. Today is what we know. We know what's in front of us today. We know what the earnings are today, but we're all so optimistic about the future, which is a great thing, that we all are willing to pay so much premium for the future. Very rarely do companies actually perform to their 3, 4, 5-year projections. But we pay astronomical levels for those projections. And then when we hit those levels, so the example would be Tesla. Tesla's the future. Tesla's the future of the car. They're going to be bigger than GM. Okay, fine. They could be bigger than GM. So why give them a bigger than GM valuation today? Let them go earn that. Seth, it's like the day you applied for grad school to get your PhD. Did they hand you the PhD right there?
Of course not.
Why not? You didn't earn it yet.
Yeah, obviously.
I think I'm going to be a billionaire someday. I'm pretty confident of that one. Do I go spend like I'm a billionaire today?
Not that I see.
No, because I'm not there yet. Let me go earn that first. Let you go earn that PhD first, then we'll give it to you. But yet with companies, we don't treat them like companies. We don't treat them like cash flow entities. We treat them like baseball cards. Like, oh, well, Mickey Mantle's doing really well, so I want this one. Or Puig is doing really well, I want this guy. As opposed to, hey, what's their performance today? Well, they're generating this cash flow. Great. Based on that. Now, do I believe in giving a premium for companies that have more potential? Of course.
Yeah.
But how much of a premium are we talking here?
Warren Buffett was saying how that when he's looking to invest in businesses, he first values the business and then sees what its stock is at and then makes his decision.
Absolutely.
And obviously you have to have the wherewithal to know value, but you've said for many years now that Tesla was overvalued and that it's too many fanboys like myself. I almost wore my Tesla t-shirt. Maybe I'll wear it next podcast.
I'm a fan of Tesla, just not the stock.
People rip you up online for if you just even put Elon Musk on your Facebook page. People eat you
You know
up.
what's funny? I wrote that article defending Elon Musk, and I still got some people. I was like, "What, guys, I'm defending Elon here. Like, don't kill me here. I'm defending the guy."
Yeah.
But that's the thing. I always tell people there's a difference between a company and the stock. They're two different things. And
Yeah. People ask me, what does Paul think about Tesla? I said, I think he loves the cars.
Oh, yeah.
Despises the company health.
the company health is awful. Now, if he's cash flow positive, wonderful. But that doesn't mean that we should go give them a huge valuation just because they're finally cash flow positive. You gave them the valuation based on them being cash flow positive and being as big as GM. Let them get there first.
Yeah.
Let them understand. It's just.
What did you just burp up right there?
Did I burp? I'm sorry. I had breakfast this morning with Mary.
You normally don't eat breakfast.
I know, but Mary and I have a weekly breakfast, and we missed.
How cute.
I know. We missed last week. By the way,
Your
Mary is
usual-
not my. When he says how cute,
Love interest?
she is not my love interest. She works for me. She's a great person. She runs all my real estate. She does a fabulous job at it.
We'll have her on the podcast.
We
at
should
some
have her on the
point in time.
podcast.
Yeah.
There's no Harvey Weinstein stuff going on over here.
You had your usual McDonald's this morning?
No, not McDonald's. Bob Evans. We do Bob Evans, and we missed last week for whatever reason. Was it a holiday? Was it something? I don't know. And then I'm out of town. And then next week is we missed Monday because of Christmas Eve. Next week is New Year's Eve, and then we're going to Mexico
Yes,
the week after.
We're excited to. We've talked about it before, but we'll be doing a vast number of podcasts on location
With
You know,
interviews and everything. We're gonna have
Yeah.
Joaquin on.
I
haven't talked about that yet, though.
Rahman, who runs
Fit Active Sports.
Fit Active Sports, who's killing the game with his workout equipment.
Yep.
And we will be in the Paul's Mexican Villa. Big house or small house?
You will be in the big house. I will be in the small house.
How lovely. The whole place to myself.
Yeah, well,
8,000 square feet. My own pool.
10,000. But it'll be you and the boys. I will be by myself in the casita.
Okay. Well, anyway, that's coming in a couple weeks. So
anyways, when we talk about psychology of things, it's so prevalent in the stock market because it's easy to change on any given second. And I find myself getting so frustrated, and I really shouldn't. I have to work on that for myself. But there's a difference between stock and the difference between the company. We can have a great company and a bad stock price. You can have a bad company and a great stock price. Warren Buffett believes in buy a great company at a good stock price, at a fair stock price. And I think that's extremely important, and that's what I try to do. When the market does fall, I'm going to look for the big names that have just been beaten up too much. When the market falls in half, I'm not going to go look for $100 million company that's going to become $1 billion company. I'm going to look for the $5 billion company that should be $8 or $9 billion. And okay, let me go buy some shares in this. And we'll talk about that on these podcasts, and it'll be funny because people hear me going, the market's down 20% this year. How's Paul go about it? And by the way, I criticize Amazon, right? Mark my words. There will be a day in which I say you should buy Amazon stock. It'll happen. Mm-hmm. Just like in 2000 when Microsoft was so overpriced, and I was super bullish on Microsoft in 2010. These things happen. You know, people are going to say to me, Paul, you hated Amazon before. No, I didn't. I hated the value.
Overvalue. Yeah.
Yes, that's what I hated. I love Amazon as a company. Their cash flow now justifies X, Y, and Z. Amazon's a great company. It's not worth $13.50 today. I think it's worth $250 to $300.
$250, $300.
That's what I think it's worth.
How does all this translate into your mindset about real estate?
It's no different in real estate. There's a better time to buy. In the real estate market, when you're looking at assets, you're looking at real estate to buy, people will exaggerate the benefits of location, the benefit of upside potential. It's like, hey, if there's a lot of upside potential, remember the deal of the week we looked at and they said 40% upside in the rent. It's like, well, then go do it. If it's that obvious, then you go do it and I'll pay you more money for it. And that's the funny thing. People think I'm just trying to be cheap. No, I will pay you more if you give me more. But if you tell me, Paul, pay me more because then you can do more, well, that doesn't make any sense. You're going to make me do all the work and pay you for the premium? And by the way, you know who says this? Brokers. These real estate experts out there who are selling deals will be like, well, yeah, if you do this one unit, it increases the value by $30,000. So all of a sudden, the property is $30,000 per unit more. It's like, no, I still need the cream. That's how this all pertains. There's going to be a better time to buy real estate, stocks, every asset out there because of low interest rates making everything overpriced. There'll be a better time to buy. The key will be who's going to be able to look at society and say, you're all wrong by hating these assets. But I learned from Paul and Seth and Andrew and Tim and all these guys, and I learned that I understand what value is, and I'm going to go buy right now when everybody else doesn't want it.
You know, I probably told you already this story, but I have some friends who are interested in sort of your training, and at the moment they can't justify the upfront cost. And I told them, well, just mark it on your calendar 1 year from today when you don't do anything.
Yep.
You still haven't done anything. Another year, your life has gone by. because now is the time to learn. I'm learning a bunch from you just being around you so much. So
I pay you to learn.
that's right.
I pay you to learn.
I got a pretty good deal.
Everybody gets paid to learn. By the way, that's great. And you're right. A year from now, when you haven't done anything, it's about holding somebody's hand and saying, let's go do this. And the other thing is, I'm very confident if you did it on your own, you wouldn't make as much money as if you had us. And over a 30-year period, that leads to literally $6 or $7 million in extra value. So to pay $10, $20, $30,000 for that, that's penny wise and dollar dumb. I mean, you're just sitting there saying, what matters to you? If $6 million extra matters to you, it's no different. It's about teaching you the psychology of things. And if you understand that psychology, investing becomes a lot easier, but also a lot more frustrating, because in times like the last 3 years when I've just seen the stock market go like this and real estate go like this, and I've been sitting on the sidelines like this, it's frustrating for me. I have enough confidence in myself I just go in my office and cry when you guys aren't looking. And that's what I do. I just sit there and
You
say,
cry a lot, you say.
I haven't cried in a while, but I usually cry about once a week. Things make me sad.
Sad or happy?
Most of the crying is from sadness. It's just like, not to be too, Debbie Downer, but I think about like the holidays now. I think about like, kids and stuff like that. Don't you think?
You want them or you don't want them?
I mean, in the sense of like kids who don't have stuff.
It's a sad world out there. Yeah.
They're only whatever, but either way. And I cry about, what do I cry about? Just being frustrated. I cry when I get frustrated. Like I'm a little brat. I'm like, I'm so frustrated. I start crying.
He is a big baby, isn't he, Tim?
He's a big dumb animal, folks.
Yeah. Well, the crying also goes along with the adult diapers you normally wear.
That's for other
From all the
reasons,
Chipotle you're eating, right, Tim? Guacamole is extra. We all know that.
Guac is extra, and I take it every time.
They keep telling me, and I just say, just put it on. I don't care.
I used to say, when they asked me that, I used to say, I'll take some guac. I know it's extra. And
Yeah,
I know
just
it's extra.
cut to the chase, right?
Yeah, no, they don't say it.
Thanks, everyone, for watching. Again, like and subscribe our video on YouTube. If you're hearing this only through audio, through all the audio channels, whether it's iTunes, Tim, what are the other ones? iTunes, SoundCloud, Google Play, Spotify. We're on all of those. Tim's working his ass off to get us on all those. And but if you want to head over to our YouTube channel, you can see what we look like. Brutally handsome, the two of us together. I know.
We're actually going to have a little competition. Who's going to vote us the most handsome?
Wow. Yeah.
I think you'd win that one.
Well, I'm controlling the bear market, I would say. So anyway, guys.
Can I make one comment?
Oh, please go.
How you looking for us is Learn From Us Investor Academy. Don't look up my name. It's Learn From Us Investor Academy. Then you'll see my pretty face. And learnfromus.com. We're working on a new website that'll be up shortly. I think it looks beautiful, the designs.
Stunning. Paul can also be found on Instagram at Paul_Gabriel.
Gabrail.
It is confusing.
Yes.
Gabriel. I have to say it out loud myself.
It's spelled like Gabriel, but pronounced Gabriel.
And on Facebook, you can follow him personally at the real Paul Gabriel.
Is that what it is?
Yeah, we had to choose that because all the other famous Paul Gabriel's already taken.
Well, I have a cousin named Paul Gabriel, but he spells it differently.
Okay.
Don't add him.
Thank you, everyone, for listening. We will be back with more podcasts. We're going to smoke through a lot of these. And, stay tuned. We love you guys. Thanks so much.
Peace.
See ya.